In a world that feels more and more unpredictable, every investor is looking for a lifeboat. For centuries, that lifeboat has been gold. But now, there's a new contender on the scene, one that claims to be digital gold. So in this analysis, we're putting gold and Bitcoin to the ultimate test. When a crisis hits, which one truly protects your money? Let's find out. So let's kick things off with a scenario that is pretty much every investor's nightmare. You know, that one moment that changes everything and forces you to make a huge decision fast. Just imagine waking up to that headline. The markets are closed for the weekend, tension is spiking across the globe, and nobody has any idea what's going to happen when they open on Monday. Now, this might be a hypothetical, but it perfectly captures the kind of sudden geopolitical shock we're talking about. And that is the absolute core question, isn't it? Do you sell everything and run to cash? Do you buy an asset that's considered a safe haven? Or is the best move to do nothing at all? The answer to that question can be the difference between profit and loss. Okay, let's start with a traditional champion in this story. The one asset that humans have turned to for thousands of years in times of fear, gold. So what exactly is a safe haven? Put simply, it's what you buy when everyone else is selling everything they own. It's supposed to be the shield that protects your portfolio from the storm. I mean, from the Roman Empire all the way to the financial crises of the 21st century, gold has proven time and time again to be a reliable store of value. Its reputation wasn't built in a few years. It was built over centuries of trust. And what's really telling here is that it's not just individual investors. Just look at what the biggest players on the planet are doing. This chart shows how the world's most powerful financial institutions, central banks, are consistently buying and hoarding gold. When governments trust an asset to protect their entire economies, well, that's a pretty powerful signal you just can't ignore. And now, let's talk about the challenger, the asset that was born out of the 2008 financial crisis, pitched as the digital solution to the problems of the old financial system. Let's put them head to head. They're both scarce, right? Gold is physically limited, and Bitcoin is programmatically limited to just 21 million coins, but the differences are huge. Bitcoin is way easier to move around, but gold has that long history. And the big one, look at the volatility row. Bitcoin is extremely volatile, while gold is relatively stable. So that's the theory. Bitcoin has a lot of the same properties as gold, but for a digital world. The question is, do those properties on paper actually hold up when a real crisis hits? All right, it is time for the test. We're going to take these safe haven theories and put them up against data from real and hypothetical crises to see how each asset really behaves under pressure. We're going to use these events as our laboratory. The Russia-Ukraine war in 2022, the Israeli-Palestinian conflict in 2023, and that hypothetical Iran conflict we started with for 2026. These are the moments that really show what an asset is made of. And the results were, well, pretty shocking. In that hypothetical Iran crisis, as investors fled for safety, gold soared to historic highs, breaking $5,300 an ounce. Meanwhile, Bitcoin, the supposed digital safe haven, completely tanked, losing a quarter of its value. It acted exactly like a high-risk asset, not a safe haven. And here's the bottom line. The data doesn't lie, and the experts confirm it. Professor Campbell Harvey from Duke University sums it up perfectly. He says Bitcoin still behaves like a speculative asset, tied to the stock market, not like a shield during a crisis. When fear takes over, investors sell Bitcoin just like they sell their other risky assets. Okay, so gold clearly proved its worth as a standalone asset. But what about its effect on a whole diversified investment portfolio? Does having it in the mix actually lower your overall risk? Now, that is the most important question for a smart investor. To answer that, let's step back from a single asset and look at the bigger picture. A really deep academic study looked at this exact point. What the researchers did was simple but brilliant. They built two identical international investment portfolios, with just one crucial difference. The first portfolio had an allocation to gold, and the second one didn't. Now let's see how they both performed under pressure. And the results really show the difference in a stunning way. The portfolio without gold had a volatility rate of 15.21%. But the portfolio with gold saw its volatility drop significantly, down to 13.28%. So what does that actually mean? It means gold didn't just go up in value. It acted as a stabilizer for the entire portfolio, absorbing some of the shocks and reducing the sting of losses during downturns. So what have we learned from this test? And more importantly, how can you apply these lessons to protect your investments the next time the news cycle explodes? So, how do we translate all of this into a practical plan? It's simpler than you might think, and it boils down to 4 steps. First, and this is the most important, don't panic. The worst decisions are always made based on emotion and scary headlines. Second, hold a heaven. Allocating somewhere between 10 to 15% to gold can act as a safety cushion. Third, stay liquid. Keep some cash on hand because incredible opportunities always pop up in the middle of a crisis. And finally, rebalance your portfolio regularly. And that's really the question this all leaves us with. Gold has proven itself for centuries, while Bitcoin has stumbled in its first real tests as a safe haven. But as technology and markets evolve, could that dynamic change in the future? Or will human nature's search for security always favor something tangible and time-tested? Thanks so much for breaking this all down with us. If you found this useful, don't forget to subscribe to the channel. We always love to hear from you, so please suggest topics you're interested in down in the comments, and we'll look into them for next time. See you then!